Have you ever wondered why a support level in Bitcoin that seems like a sure thing just vanishes? Well, there's this emotional roller coaster that repeats in every single bull run, and understanding it is absolutely key. So today, we're going to break down the short-term holder cycle. Seriously, have you ever been there just watching a price chart, you see a level that looks like solid ground, that strong support everyone's counting on, and then poof, it just collapses. It's a super frustrating experience, right? But here's the thing, it's not random. There's actually a predictable reason why it happens.
And the answer lies in what we call the short-term holder cycle, or STH cycle for short. Now, this isn't just about numbers on a chart. It's a recurring, predictable pattern of human emotion and behavior that plays out time and time again.
Okay, so let's break this whole predictable journey down step by step, because once you understand the psychology behind it, you can start to see why that strong support might not be so strong after all. It really all boils down to 5 emotional stages that these market participants go through. It starts with confidence, which turns into overconfidence, then conviction starts to fade, leading to total exhaustion, and finally, the whole market structure just flips. Let's kick things off at the very beginning. You know, when spirits are high, everyone's optimistic, and the market feels like it's just full of opportunity. This is exactly where the cycle is born. So in stage 1, confidence is just buzzing. Short-term holders are seeing the price hang out right around where they got in, and their thinking is pretty simple. Hey, this is a great opportunity. If it dips a little, I'll just buy more. They don't see a small drop as a risk, they see it as a discount. And you know what? Their strategy feels like it's working perfectly. The average unrealized profit for this group is sitting at a pretty comfortable 8%, and that little bit of positive reinforcement tells them, yep, I made the right call. And that brings us to stage 2. The price dips down to that support level and it holds, maybe once, maybe twice. And every single time it bounces, these traders just feel more and more validated. The story becomes, see, I told you, this support is solid. So what do? Of course, they add to their position again. This success is what fuels the next phase, as their average profit balloons up to 15%. But this right here is the crucial point. That initial confidence has now morphed into full-blown overconfidence. They feel like they can't lose. But you know, markets have a funny way of testing even the most confident hands. And this is exactly where the mood starts to shift, and you start to see the first cracks appear in that foundation of confidence. Welcome to stage 3. The market comes all the way back down to test that same exact support level for a third, maybe even a fourth time. And the feeling in the air just changes. Those easy, quick bounces, they're gone, and doubt starts to creep in. And the main reason for that doubt, it's seeing their profits just evaporate. That comfy 15% gain has now shriveled down to just 3%. All of a sudden, the risk feels way more real than the reward. And right here, you can see the complete psychological pivot. That old mindset of, hey, if it dips, I'll buy more, is totally gone. It's been replaced by this new, much more cautious thought. You know, I should probably just take my profit earlier. The aggressive optimism has completely flipped to defensive caution. So this growing caution, combined with shrinking profits, it creates the perfect storm. The pressure on that once solid support level hits its breaking point, and that leads us to the climax of this whole cycle. And this brings us right to stage 4, pure, simple buyer exhaustion. The very same group that was so eagerly buying every little dip is now just tired. They've defended this price level over and over again, and their financial and emotional energy is just completely drained. And this is the moment sentiment just completely collapses. That internal monologue shifts to, you know what, forget it, I'm done. I am not adding another dollar here. The collective will to defend the price is just gone. And with no buyers left to prop the price up, well, that's when it happens. The support that held strong 3 times before, it finally gives way. It doesn't just bend, it shatters. And this leads to the final stage of the cycle, the great role reversal. That old support level now becomes the new resistance. The market dynamic does a complete 180. And when the price tries to bounce back up, it just hits a wall of sellers. But why? Well, it's because everyone who bought at that level and then held on through the drop is now just desperate to get out without a loss. Their mindset is just please let me sell at my break-even price and I'm out of here. That old floor of support has now become a new ceiling of resistance. So that's the whole cycle, from confidence all the way to exhaustion. The big question is, why does any of this matter right now? Well, because understanding this pattern gives us a really useful framework for looking at the current market. According to the data from our source, it looks like we are currently smack dab in the middle of stage 4 of this very cycle. And that means we're in the buyer exhaustion phase. That key support level has been tested over and over, and the will to keep buying the dip is fading fast. So, if this cycle plays out like it has before and the bull market continues, where could we be headed next? Well, the data points towards a potential key level of around $103,500. Now, that's not just some random number pulled out of thin air. It comes from the short-term holder realized price. And you can just think of that as the average purchase price for all the recent buyers. What's wild is that historically, the market often finds its real footing about 10% below that average cost basis. So that makes this a pretty logical target to keep an eye on if the trend holds. And this all brings us to the final and most crucial question you should be asking yourself. The next time you look at the chart and see a price level that seems to be holding on, you now have a new framework to think about it. Is this truly a sign of strong, sustainable support? Or are you just witnessing the last stop on the emotional roller coaster right before buyer exhaustion finally kicks in?